to somebody to make $20,000 for 2 weeks, and then they flood your house, you're screwed because your insurance coverage isn't protecting them. It's protecting you. So.
Hey guys, welcome to another episode of Break It Down with Braydon. I got Nick Ptak back on with me today. Let's go, baby.
How you doing, dude?
Doing good, dude. How are you?
Sorry, I'm good. I think I just bumped your mic.
Damn it, can never have you on again. Last time.
I know. Too much coffee or something. Good to see you, dude.
Good to see you. Yeah, Nick was actually my first guest actually on Break It Down with Braydon back in the day. I think it's been a little over a year now. So
congrats.
Thanks for being the guinea pig and coming on and coming back.
You are welcome. And how many episodes
So
you
I
got?
didn't scare you off yet. I think
No.
we're at 59.
That's awesome.
Yeah.
Good.
Yeah.
Dude, congrats.
Thanks,
You've
sir.
really been consistent. I've watched a lot of the stuff you've put out. A lot of people start a podcast and then they do 10 episodes. It's done. So congrats, dude.
Thank you, bro.
Yeah.
Appreciate it. So yeah, I mean, we had you on a little over a year ago, I think. Kind of talked a little bit about yourself, kind of where you've progressed in the last year. So a little background. Nick's with North & Co.
Yep.
And just had a great year. Obviously, it was a little bit of a different real estate market this last year comparative to when we met
Right.
the last time. Let's talk a little bit about that. So,
Yeah.
like, maybe from when we kind of had you on the last time to today, like, what's changed?
2022 was two different markets separated by really 6 months. January to May, let's call it June, different market. June to December, different market. So in terms of like the overall data for Phoenix that people care about, the average peak price peaked at about June, July, and then came down from the peak of pricing into December and January about 10%. Inventory did solidly, but then it's funny because in October that was the highest it went, and then it came down for holidays, which happens, and we're still like 50% undersupplied for a balanced market. Obviously, the big thing that happened, I'm sure everybody's paid attention to that and seen it on every article, is interest rates went from like 3% and then they went up to 7%, which people are like, okay, that went up 4%. No, that went up 350%. So people could buy a $900,000 house. Now they could buy 600 in like months.
Yep.
So obviously that's different. Now coming into 2023, what's interesting is rates, instead of being the 7s, are right now in the 6s. Like, we're recording this, what's today? The 25th of January, 2023. We're at an interesting position because inventory hasn't gone up and rates haven't gone up for a while, about, I'd say, 2 months.
Yep.
It's after the holidays. It's into the new year. I think people are saying, okay, the rates still aren't good. They still suck, to be honest. But if rates come down, which is there's a lot of activity, there's a lot of things I'm seeing that say rates will come down to some point. I think there's a lot of consensus thinks they'll stabilize in the 5s somewhere by end of year.
Yep.
Prices will probably go back up because demand will pick up. So what if I try to get a deal now, negotiate 5 to 10% off the price, get terms. I just got a great deal in terms on a townhome for a client, and then refi later. That's, I think, a lot of people's thinking. And also a lot of people just are like, well, if rent has stayed the same or gone up, why, that, I think people are making that decision now. They're like, well, rates haven't gone up to 8, 9, 10%. They're stabilized. Maybe I can do something now and then refi later.
Yeah, I think there's a lot of people that were on the fence for sure. Like, okay, maybe it's just cheaper to rent right now than it is to buy.
Yeah.
But like you mentioned, it's like, okay, there's good opportunities out there right now. People are getting concessions. People are getting inspections. People are actually making repairs and doing things of that nature. Which
is a really good, normal, healthy, balanced market. No inspections, no appraisal is not good for a buyer or a seller. I never recommended either party do that. Here's something interesting I'm seeing. High-end luxury spec development, meaning new homes. So I'm going to buy an acre in Paradise Valley with a home that's a dump, and I'm going to tear it down, an old ranch house. That's still really, really hot. That was not hot 5 years ago in PV. But because when money was artificially cheap from like 2010 to 2022, people made money in companies. They sold their company. They've made $30, $40, $50 million. The M&A market and companies being acquired for insane multiples, people made money, and now they're buying these homes cash. Yep. It's like a bifurcation, meaning just a splitting of like the haves and haves not. And the people that made a lot are like, well, I'm not going to remodel a house for a year and a half. I want it done.
Talk a little bit about spec homes if some people that may not know the term.
A spec house means a developer buys a lot. It's either raw land, so there's just dirt, or there's a house on it, right? They knock the house down, they tear up the whole foundation, they get rid of all the landscaping, and it's an empty flat lot, could be on a hill as well, and then they build a brand new house on it. So instead of having an old foundation, old wiring, electrical, an old home with 8-foot ceilings, you then get to build whatever house. So a developer, a builder, is going to build. Right now, what seems to be in desire is not these 15,000 square foot mega mansions, unless it's like in Silverleaf and it's one of the really high-end builders. Yep. You're usually seeing 5,000 to 7,000 square foot, 4 to 6 car garage, pool, and you're seeing that's what I'm seeing a lot.
Yeah, people don't need a compound anymore. They actually want functionality, but they still
have
all the extra rooms for in-laws to come in town.
And then if they have a family
kids or whatever.
of 2 or 4 kids, everyone has a lot of space. They're comfortable. Yep. They have probably a big kitchen, big family room. Maybe they even have a separate TV entertainment room. And then really after 4,000, 5,000, 6,000 feet, like you don't need more space.
Right.
And most people don't,
yeah,
right?
It's just extra maintenance.
Yeah, it's like a vanity play. Like I don't need more than 6,000. I don't know of a real use case over 6,000 square feet.
Right.
Besides, unless you have like a super high-end luxury short-term rental and you're renting it out as a business.
Yep. Or a huge family that's coming in every year or whatever.
Yeah.
Something like that.
Right.
Yeah.
The whole family, which how often does it happen?
Exactly.
So that's what a spec house is. And I am seeing, like an acre of dirt. I was just talking to Max and Patrick with America One. They're great realtors and own their own firm. And they're saying an acre in PV is trading anywhere from 1.5 to 2 million, depending on location, depending on views. And then you do the math. Okay, you're building at like 700, 800, 900, 1,000 a foot, depending on fit and finish. So then you're reselling those at 6, 7, 8, 9 million. So that's still doing really well.
Yep.
So people that want to still build and develop, even though in 2023, I think we're going to see the Fed hike rates. It's already baked in. We're probably going to see rates go up a little more and then stabilize, come down. There's a lot of people that made money that are okay, and they want convenience. They want luxury. They want it done. They don't want to go through a remodel. Yep. And that high-end luxury market's still doing really well.
Well, and with those specs, a lot of times those are being pre-sold based off of the plans and the renderings that they put together. Like the developer or the architect puts the renderings together.
Correct.
And then those just get pre-sold before they're even touched the ground.
Right. All those homes on Exeter that are going up, some in Lafayette, which is in Arcadia. I saw one actually
today that got posted on Exeter. It was like 7.5 million, and it was just the rendering. And it looks stunning, but it's like, all right, that's the future and what that could be.
Yeah. My dad grew up
3 years to build.
My dad grew up in Phoenix and went to Vaughan in Ingleside and Arcadia, and he just always says him and his dad are just always saying, my grandpa, like hindsight 2020. Like I just can't imagine. They're like, we should have bought 5, 7, 8 homes in Arcadia, in the 70s.
Yep.
But so that's really interesting. But right now is a solid time in terms of on the buy side to negotiate some stuff. I don't know how long that lasts. I think a prediction's almost, let's be honest, no one really can predict the future. But that's just what I'm thinking is that the Fed rate goes up, the 30-year fixed mortgage rate's tied to the 10-year Treasury. But if the Fed hikes rates, the 10-year Treasury usually goes up with it, which probably makes rates go up. But there's probably not going to be that we're hearing another too many more rate hikes before April, May, June. It stabilizes and rates start to probably fall. So that's I think if people are looking at it and they're just looking of quote unquote timing, sometime after this year in quarter 2 or 3, I think prices start to slowly go up again.
Yesterday actually I was meeting with an agent, or actually was at the Suns game with him, and we had whatever. And he said he sat an open house over the weekend. He had 35 groups come through and 5 offers. I'm like, okay, it's getting back to that.
Yep.
Especially with all the events coming up, Waste Management, Super Bowl, there's just going to be so many people that are going to come into town, realize how amazing Arizona is, how great weather is.
Right.
Especially if it ends up being like New York or Philly.
Yeah,
they're all going to come over here and go, oh.
You'll see like the markets like Scottsdale, the ones that have a lot of second homeowners. I would think there'd be more demand than the normal vacation markets. Like maybe North Central Phoenix built more, downtown, midtown won't have as many like vacation people wanting to buy a second house, but you're going to see PV. Scottsdale, North Scottsdale, yeah.
I was texting Alex this morning. I'm like, do we put our house up for Super Bowl rental or whatever? And she actually ran into one of her friends that's got a couple properties that she manages, and apparently they're not even rented yet for Waste Management and Phoenix Open, which I was kind of surprised about.
Interesting.
I just said the same thing. Waste Management and Super Bowl.
Interesting.
I thought that was interesting too.
Well, we've seen that in the last year that the Airbnb boom led to the Airbnb bust, where on one one specific type of house between Scottsdale Road to Pima or the 101, from like McCormick Ranch to South Scottsdale, if you bought a house that's 2,000 square feet, it has an 8-foot ceiling, it's remodeled and has white shaker cabinets, it looks like a lot of the same houses. Although it's nice, it's the same product everyone's seeing, and you're not going to get 690 anymore. That's what you're seeing, the price compression come down. But the high-end, really, really high-end luxury short-term rental market seems to still do well. Things like the Brexley, which is that cool Airbnb. Interesting, though, we touched on Airbnb about renting your house out. People should talk to their accountant, talk to a CPA. This is not accounting and legal advice or financial advice, but there's an Augusta rule which allows you to rent your house out, your primary residence, and make tax-free income if it's 14 days or under. You need to have
you can rent it out to yourself, right, as a business.
Yeah, correct. Again, talk to your accountant for that. But people are going to do that. One, you should talk to your neighbors. Two, you want to check your HOA rules if you're in an HOA, which they probably won't allow it, but if they do, great. Three, you need to have insurance in place. Like, we're both in a B&I group, right? And one of the insurance agents' commercials was saying, if you're going to rent out your home at the Super Bowl to somebody to make $20,000 for 2 weeks, and then they flood your house, you're screwed because your insurance coverage isn't protecting them. It's protecting you. So if you're going to do that, you need to talk to your CPA and insurance agent, but it's definitely a consideration. I mean, I was thinking about it with Erica, and she's like, how would we do that? Where are we going to go? And I'm like, that's a great point. So it's a no. Yeah.
That's pretty much what we came down to too.
But it's 8 months on mortgage payments.
That's what I said. I'm like, well, babe, it's the money.
I know. She's like, but we have a 2 and a 1 year old. And I was like,
they'll be fine.
Yeah. And it's like, no. So logic took over, but I was definitely thinking about it. Yeah.
Tell everybody about your new podcast.
Yes, what everyone just wanted to hear, another washed up mid-30s guy with a podcast. You should clip that. So I started an Arizona sports podcast with my friend Ben Dalton. Shout out to Ben. We both went to ASU. We're both natives, and although I have respect for a lot of people who discuss Arizona sports on like 98.7, I used to work there in promotions when I was in college. Most of them are from the East Coast, the Midwest. They're not from here. So a lot of the angles and the takes, I mean, I'm a huge sports fan, as you know.
Yep.
So Suns, Cardinals, Diamondbacks, Coyotes, Mercury, Rattlers. I'm an ASU guy. Even U of A, like you see it discussed by people, like usually from a point of view from someone who's not a native. So we started the Native Arizona Sports Show. So on Spotify and Apple, it's Native AZ, like Apple, Zulu AZ Sports Show. We really break down things, and we can really, I think, identify with the audience because we're from here. We're both Suns season ticket holders. We've both been to all the games. We've experienced the heartbreak. So I think it like resonates with people more than someone who's from New York saying, you know, Arizona sports fans should do this. They should be more passionate. They should, well, you don't know what it's like to be from here. And half the people are from New York who tell you that your teams suck and you shouldn't be a diehard fan. And, you know, your city's never going to be like New York. So I think that has resonated a lot, and we'll see where it goes. I'm on like 17 episodes. So I'm trying to be like you and get consistent.
Hey, you're doing a lot of them.
And I got to buy this mic because this is a nice mic. Yeah, it's fun, man. It's good. We just do it on the weekends once a week and release a few episodes a week.
I love it.
Yeah.
What's the goal?
First and foremost is just to have a creative outlet and have fun, because like, is it realistically going to make money and stuff? And like, probably not, but like if it could. And I think the idea
picked up by one of the local teams or something
like that.
So
like we're trying to figure out what's our angle, right? Because
would you ever have guests on, like professional athletes from different teams and stuff?
So that's the next play, is have on really high-end guests. Hopefully, like, I'd love to have Kenny Dillingham on.
That'd be awesome.
That'd be pretty sweet. I'd love to have former athletes on. The hard part is like, okay,
Kenny, we're going to tag you in this, just so you know.
Kenny,
you got to be on Nick's podcast.
I would love that more than anything, and I'll donate to the Sun Angel Collective also, the NIL. You know, because like you have podcasts, you have fans, you have bloggers, reporters, journalists. They kind of all play in the same space. Like you're not an athlete, so you don't know what an athlete knows, first and foremost. So we're never going to act like we know more than a professional athlete.
Someone's played it,
because we don't. The best commentators on TV and sports are former athletes.
I agree.
Period. They know the game better than we do. But if we can be a voice of the fans, just be like, this is what we see, this is how we feel, and just be in our lane, I think that's the goal. And then hopefully have on good guests. And then the sort of kicker and what we're trying to toy around with is if people will give us permission to sort of state off the record inside info. Yep. Like I'm working on one with the Suns through a friend of mine, but I can't go on record on it as of now. Yep. And it doesn't mean that these trades are going to happen. It's just like things that you hear and then, fans like that. So we'll see. And I just hope it goes somewhere and we just stay consistent and just have fun with it. And then to get it really big, we're going to have merchandise. We're going to have to like go on site at some of these games. We're going to have some paid social growth where we're going to like do Instagram sponsored ads and video. But I think just one step at a time, we'll see,
Yep.
I'm excited. The goal is 100 episodes by end of this year.
Okay. Wow. That's a lot.
Yeah. So we're at like 17. So
okay. How many will we record in a sitting?
3 to 4.
Okay.
No, like 20 to 30 minutes.
Yeah.
No more than 40. No less than 7 minutes. Like we'll do like a breaking sports take. Like if something just happens, we want to do it that day. A major player gets traded, a major thing happens, like Robert Sarver selling the Suns,
yep.
or Cliff Kingsbury getting fired. That's the challenge with sports content. If you don't get it out, like you're under the gun.
Yeah, we were talking about that. It's got to be instant, right?
Somewhat.
Yep.
Yeah.
General outlook on the Suns then. What's prediction for the Suns?
Well, this literally just happened today. That Matt Ishbia, the guy who's buying the Suns, is going to be buying them before the trade deadline expires, which is a huge move because now he can be authorized to make trades. Because before, when it was in limbo, right, the
yep.
deal is under contracts and escrow, right, it's being the due diligence. The league has to approve it. All the owners have to approve this guy buying it. Sarver was still pulling the strings as to who could come in on trades. That's why they haven't made any moves. Jay Crowder, who's sitting at home collecting $11 million doing nothing. Side note, it's a very odd move if you're trying to get another contract, Jay, but more power to you. There could be no moves. So now the deadline's February 9th. I think he's going to come in and hopefully make a trade. And my outlook is pretty realistic. They're not good enough to win a title this year, probably as constructed. But if they make a move to acquire a third guard that is not as good as Chris Paul and Booker, but like somewhere in the range of I don't know if you know who Jordan Clarkson is, or a good third guard, better than Campaign, put it that way. Campaign and Landry Shaman off the bench, they're not good enough to be the third guard playing 20-some minutes and make an impact. So if they got one guy like that, I think they'd have a shot for sure because the West isn't as good this year, the Western Conference. It's the top couple teams are good, but the East is really good. I think Milwaukee wins it all again, to be honest. That's my prediction. The Milwaukee Bucks are built for the playoffs, or Boston. That's my thought, but
it's not really what I wanted to hear. I wanted to hear Suns all the way, but it's fine. It's fine.
Suns all the way. I'm a homer. But there's hope on the horizon because Sarver was just horrible as an owner.
What do you think of the mortgage guy coming in and buying the shop?
Hope rates go down and
yeah,
business booms.
exactly.
Yeah. But it's him and his brother Justin, who's a hedge fund private equity guy.
Okay.
I think he runs a company called like Shore Capital Partners.
Okay.
Long story short, it's both of them that have the majority equity ownership, or they have the majority controlling stake or something. So you have two guys that have the ability to infuse cash. They're going to, I think, do really well. I mean, UWM, plug for UWM. I've done a lot of deals through brokers with them. They are so well run. It's insane.
Yep.
They built a powerhouse, and that dude's a former basketball player, played at Michigan State.
They're not bigger than Rocket.
Right.
Yeah.
And he's competitive as shit. You can bleep that out. Sorry. Competitive shit.
Fuck it at it.
So he's so competitive that him and Dan Gilbert, who owns Rocket and Quicken, who owns the Cavs, right?
Yep.
They're like, they don't like each other.
Yep.
I love that he's a basketball guy and he's competitive. So everything starts at the top, right? Like, so you have a new owner come in, and I think there's hope for the future because the Suns have a nice young core. They just got to have better owners going to spend cash, and I think over the next few years they'll still be in contention. We'll see what happens.
Yeah.
Yeah.
Let's jump back. So talk about just like the general economy right now.
Yeah.
What you kind of see on the horizon there.
Fed's going to hike rates. It's already baked in, I think, once or twice more, and I think they're trying to then have a somewhat soft landing. I mean, inflation's wild on food. It's horrible. But then, like, cars are coming down somewhat.
Yep.
Like, Teslas are dropping in value. Thanks, Elon. Cars dropped, like, 15 grand. Dude, focus, dude. Like, don't run 3 companies. But, like, so you see that it's kind of across the board. I don't know. I'm not an economist, but like I have to think by some, most recessions, the last three last about 2 years. The question, like I don't really, for homes, 08 was caused, and 09, that crash was caused by people had 4 homes that were 100% leverage, borrowed all the money, the rent because they're going to rent it out, and then the economy crashed and they had to turn the homes back and foreclose. We don't have that situation.
Yep.
I think you could see prices come down a little bit more and then stabilize. I would love to see, in some ways, I would like to see prices come down even a little bit more before they start going back up healthy, like a 3 to 5 year progression. I think a lot of people would like that. But, everything is so much a month by month thing. It's like really, that's why if you're watching this and you have a real estate agent, check in with them every month, because like a month ago, 15 showings on an open house and offers, we would not have predicted that.
Right.
So it's a month by month thing.
Yep.
Follow people, these podcasts, follow your favorite real estate person, and we'll update you.
I agree. Yeah, it's like I love watching Tina Tambor's stuff just because she's so
Cromford
kind
report.
of in the know, the Cromford Report, yep.
It's the data report that all of us look at for all the metrics and numbers for the Arizona housing market.
Yeah, and she showed that there was like a 4-week buying period like 3 months ago that you basically had an opportunity, and then it kind of actually tricked up to a seller's market in a lot of different markets like Scottsdale and PV and Fountain Hills. And now that holidays are over, this is typically where it starts picking back up and everything, and so we can start kind of feeling the bust again. And
it was like October. No, it was like, what was it? September, October, and November, somewhere in that range. And I remember thinking, but when you're in that period where rates are going up and there's uncertainty, everyone thinks, well, that's easy to make a move. No, it's not. It's counterintuitive.
Right.
You think it's going to keep going down, or you're not sure what's going to happen. So, congrats if someone pulled the trigger. If the realtor was saying, hey, I think this might be an opportunity, we don't know how much lower it's going to go or if it's going to go back up. Like, you can only deal in today's prices and terms and then make a decision. Like, I would never recommend someone buying a house if they don't know for sure if they're going to live in the same city and state for a long time. If they think that they're going to make money in a 2-year period, then move up and, buy a $400,000 house. I have to make 20%, then I'm going to move up every 2 years. Like, that's equity gambling. Like, you don't know if that's going to happen.
Right.
You should be buying something for at least a 5 to 7 year hold. Anything.
Yeah, I love the analogy that people always use is you don't buy real estate to flip it. You buy real estate and hold it and wait.
Yes.
And just because eventually over time
it goes up.
It's best to own real estate, right?
Yeah. And you should be able also, if you're buying an investment property, to really analyze, like, if I have to negatively cash flow this thing, worst case, like if rents go down, if something unforeseen happens, can you hold it for a year to 2 years and pay money to keep it? No one seems to want to talk about this on every TikTok, Instagram, BS video in real estate I see.
Well, that's the thing too, is like everyone also just has a negative outlook on it because, prices can go down 5% or 10% like they've had in the last year. Well, yeah, but if you look at the seasonality of how long values have gone up over time, over history, they've never really gone down in history. I mean, they have trickled, but it's always
over the last 150 some years, right.
So buying real estate's always just been a good investment,
especially if you're gonna live in the same city for the long term. If you're moving around and you're I call them digital nomads, you're in, like we're talking off the show, people do affiliate marketing, they do internet stuff, they're on YouTube a lot, or they have a job that's work remote, and you're in your 20s and you don't know if you want to settle down somewhere. No, don't buy a house.
Right.
Go live and travel the country and have fun. But like if you're in your 30s and going to start a family, and then you're going to, or anyone else that's going to live, you're like, okay, I'm going to live here long term. There's just very few times I can think of that renting your own house for like 50 years makes sense.
Right.
There's maybe one or two. It'd be like if you think you're going to start the next big company and you want to use every dollar of your net worth to start the company. I think that's a valid case to say I'm not going to buy a house, but like that's a very risky play. That otherwise, like if you're going to have a job, you're self-employed, like a house is stability. It's a place to call home, and like the fact that you can only kick yourself out if you can't make the payments. Your landlord can't. That's a very comforting thing when you have a family.
Financially, is there ever anything that you've ever done better than purchasing a house for your family?
Yeah, my business.
Yeah.
But no. In terms of the stability of like having a place.
Structure, what your mortgage payment is every month.
And the neighborhood. Like also, your primary residence is not an asset.
Yep.
It's a liability, negatively cash flows. It's an expense. So you should enjoy it. The idea that it's an asset is true if you sell it and make money over time. Tax-free. It's a great thing. You should look at a house as like a smart investment if you can say, okay, I'm going to, like the house I bought. I bought a house that was in the middle of the price point of a neighborhood. Good lot sizes. I was like, okay, my next door neighbor is 3,500 square feet. Mine's I'm buying is 1,800. I could make it look like his. I could probably build an equity with building on square footage.
Yep.
Don't buy the most expensive home in the neighborhood unless you're going to hold it for a very long time and hope the neighborhood catches up. Things like that. But like my neighborhood has a bunch of kids. It's fun. We're all really social. We hang out. We have a good time. And like, that's worth its weight in gold, and I don't have to worry every year. Like, well, what if my landlord raises my rent? What if he kicks me out? What if he sells? Where am I going to go? Like, it's awesome that I can make it mine and you just can do whatever you want. Like you rent a house, you can't renovate the house. You can't make it yours. You have to get permission for everything. Can I paint the walls? Can I do this? Can I do that? Can I, change this out? Like, it's just nice to have your own spot. It feels good to have pride of ownership. And, there's a lot of just feelings of establishment. Like you're like, I made it. Like, as long as I can just live within my means, which I think a lot of realtors and a lot of people in the industry need to learn to do, is like just
I think you nailed it right on the head, because I think a lot of people go to, all right, I'd rather just move into an apartment and have all the amenities, have all the fixtures, have a brand new build, versus taking a house that might need a little bit more work over time that I can invest money into and fix up over the years.
Yeah.
And kind of live down to their means, like you mentioned. Cause, you could go rent a condo or whatever or an apartment and save a lot of money, or still spend a good amount, but you're not going to get anything out of it. There's no return actually at the end of the day.
Right.
And then people are always like, well, what if values keep going down? Well, then you just hold the property forever. You put a tenant in there and they pay for your equity. And then in 30 years, you've got to pay it off property, and there's your retirement.
Right. The rent decrease doesn't happen as sharply, like on a property basis in a worst case, than like prices going down in a really horrible 2008. Rents go down. Everything goes down in like a really, really bad catastrophic recession. But that's why, like, especially if you should look at it, if you can hold a property and worst case pay $100, $200, $300 a month, if you even have a rental property. Like in that case, you buy a home for $500. Oh shit, it's worth $400. I need to move in an apartment and I need to rent it out. Even if you can like pay it break even, ideally make money, or worst case, you have to pay a little bit to keep it. Like you said, eventually values stabilize and they come back up. Rents generally hold or they go up, and when they go down, they don't go down forever and stay there. Generally.
Yeah. Well, and I think there's a lot to do with like generational wealth in terms of real estate. I mean, you see most of the wealthiest people in the world are just big real estate owners, investors, and
they are because of one principle, leverage, which is risky, but it is the main principle of how people get wealthy. They get wealthy on appreciation. Cash flow pays the bills and makes you money, but they make money on leverage, where they buy a commercial building for $1 million. Maybe it's undervalued. The rents are $8,000 a month, and they can get them up higher. Right. And then they make more. Then they get a new appraisal, and it's worth $1.3 million. So then they pull out money, which is really adding debt, and it's a loan. So now
it's tax free.
It's tax free money because it's debt.
Yep.
But that's why you have to make calculated decisions. But the people that usually make the most and that defer that tax and they keep kicking it down the road and figure out ways to pull out money, which is debt, it's not income, and then they can go and acquire more real estate. If they hold it for a long period, they're going to pay down the asset and generally make that cash flow. That's where people make it. Yep. But you have to be really smart, do 1031 exchanges the right way if you're going to sell, but that's the big money maker in real estate.
Yeah.
And it's in multifamily and commercial, probably the most.
Yep. Yeah, as many doors as you could possibly get, essentially.
Yep. Yeah. That's the big one. And storage units, things like that.
Yeah, I forget who it was, but he was talking about generational wealth and how the wealthiest families are the ones that are grooming their heirs to take over their organization or their company. Mm-hmm. I feel like it's the same thing kind of with real estate. It's like you're grooming your kids to get early on into real estate, and as much as it may not be your business, it's an investment in the future.
Those kids will just sell it.
Yeah.
But they should keep it and run it. But they'll probably just sell it.
There's a lot of that going on right now.
Yep. That's an amazing thing, and that's a big motivation for me. Is I want to give my kids a portfolio of a little bit of residential, a little bit of like commercial, depending on what it is, right? Storage units, maybe a couple commercial building or two, and say you can put it in like a trust, talk to the state attorney, and you could put stipulations that like this can't be liquidated for this period of time, right?
Yep.
So those are some good things. Consult to get a state attorney if you don't have one.
Yep. Yeah, that's definitely my goal, is to have enough passive income for real estate that Kennedy has the choice to decide where she wants to work, not that she has to work.
That's awesome,
That's
dude.
my goal.
That's awesome.
Yeah.
Good stuff.
Don't ever want to tell her no is kind of my thing whenever she wants to buy something too. So got big goals for that girl.
I love that, man.
Yeah.
It's exciting. You gonna have a second kid?
April 2nd, yeah. Coming around the corner.
It's wild. April 2nd. Wow. You think you're done after 2?
It's another girl, so if it's up to me, we'll see. But she hates when I say that.
You're excited, but you would love another boy too eventually. But
of course.
Cool, man.
Well, Nick, thank you for coming on again and giving everybody a little update.
Of course.
And if everyone wants to get hold of you, how can they reach you?
On Instagram is at native AZ, like Arizona Realtor. You can shoot me a text or call 602-625-0329. That'd probably be the best ways.
Cool.
Or my website's www.nickptak, which is ptak.com.
Love it. Nick Ptak, guys, Arizona native, very experienced realtor, knows his stuff, just a true professional and good friend. So, Nick, thanks again for coming on, and thanks for sticking around for another episode of Break It Down with Braydon, and see you guys soon.
Episode 59.
59, baby. Here we go.